Hey folks, Rudolph here, and let me tell you, this market is a jungle. We've got tariffs flying left and right, shaking things up big time. Some stocks are getting hammered while others are sitting pretty. With recent tariffs by President Trump on Canada and Mexico, certain stocks have experienced notable movements. Here's an overview. First up, we've got ELF Beauty, a stock that's been on fire lately. But after these tariffs hit, bam! Down 9.2% in a day. They manufacture most of their products in China. Tariffs mean higher costs, lower profits, and Wall Street hates lower profits, a high-flying stock clipped by the trade war. Next up, Dollar Tree. The name says it all, right? This company is all about low prices. But tariffs make those prices harder to come by. Shares tumbled 5.6%. Investors are worried, and they should be. Tariffs are a tax, plain and simple. And when taxes hit, profits take a hit too. Abercrombie & Fitch, another retailer feeling the heat. Their stock got slammed, down over 5%. Why? Because they're caught in the trade war crossfire. They source a lot of their clothes from overseas, and those tariffs are eating into their margins. It's a tough time to be in retail, folks, especially when exposed to these global headwinds. Let's talk about potential winners in this mess. Bill Gross, the bond king, says when in doubt, go defensive. And you know what he likes? Tobacco stocks like Altria and British American Tobacco. People are always going to smoke, right? These companies are insulated from economic turmoil. Plus, they pay a hefty dividend like getting paid to wait out the storm. Gross is a fan of telecom giants AT&T and Verizon. People need their phones. These companies provide essential services and juicy dividends. You get stability and income, a winning combination. Remember folks, invest in companies that can weather the storm. Now let's take a look at the broader market. The S&P 500, the benchmark for the US stock market, has been on a wild ride lately, and these tariffs are adding fuel to the fire. The index is down about 5% from its all-time high, and tariffs are a big part of the reason why. Investors are worried about slowing global growth. European car makers are feeling the pain. Stellantis, Volkswagen and Porsche have taken a hit as tariffs disrupt their businesses. These companies rely heavily on exports, and tariffs make their cars more expensive for American consumers. It's a lose-lose situation for everyone involved. European automakers, from Mexico to mayhem. And it's not just European car makers feeling the heat. Companies like Volkswagen, Stellantis and BMW in Mexico are also getting squeezed. These companies are caught between a rock and a hard place. They're facing higher costs due to tariffs and can't easily shift production because of existing supply chains. But wait, there's more. Honda just announced they're moving production of their new Civic model from Mexico to Indiana. That's right folks, they're packing up to avoid those tariffs. This shows how much these tariffs are disrupting global supply chains. Companies are making major decisions based on these trade policies. Let's end on a positive note, shall we? Chipotle Mexican Grill saw its stock rise after the tariffs were announced. That's right folks, up 2.1%. They're a well-run company with a strong brand and loyal customers. Plus, Morgan Stanley upgraded the stock, citing their strong balance sheet. Tariffs. Stay informed, stay invested. So there you have it folks, a roller coaster ride through the winners and losers of the tariff wars. Investors must monitor these developments closely, as tariffs impact various sectors and companies. This is a fluid situation and things change constantly. Stay informed, stay diversified, and don't panic. Remember, in the long run, the market climbs that wall of worry. Disclaimer, not financial advice, only for research purposes and may sometimes be inaccurate.